Thank you everyone for joining. We'll give just about a minute here as people are filtering in the room, and then we'll get started. And we are recording this session today. So with that, I see people joining. So we're gonna kick this off here. Thank you everybody for coming. I'm really excited about this next 45 minutes. My name is Alex Craig. I'm from Workday. We have several others on the line today that will be taking you through the application and telling you about their experience with Adaptive. We'll introduce them here in a minute, and thank you to all of our attendees. Attending this call, we have some Adaptive users. We have some Workday customers who don't use Adaptive. We have some prospects who maybe are hearing about Adaptive at the first time. So we'll try to hit all of those types of individuals as we walk through this webinar. Quick product statement here, which basically says, if you decided to buy Adaptive or do something with Workday, make that decision based on what is current functionality, not things in the future. Most or all of what you'll see today is in the product GA as we speak, and Rob will call out if there's anything you see today that's a coming feature. So why are we here? You can take this question existential if you like, hope it doesn't throw off the purposes of today, but why are we here? Think about that for yourself for a moment. What do you want to get out of this today? Feel free to drop it in the chat if you'd like. And really, our goal in putting on this webinar, why we are here, is to introduce you all to adaptive planning for those who are new to it. We're going to show how insurance brokerages are getting value out of the tool. Adaptive is a flexible tool that works across industries, across organizations of many sizes. So, oftentimes you see it once kind of in a certain box. And what we want to do today is bring to light how Heffernan is getting value out of the tool and how Okorio has taken Adaptive to market and really helped a lot of customers with their planning needs. We'll go through a live product demo, so you'll see the look and feel of a day of the life in Adaptive. And then, as I mentioned, how Heffernan is using the tool. Mike will make a few comments probably throughout the demo, and then we'll have a quick fireside chat, a morning fireside chat as we wrap up today. So how are we going to get there? First, you have myself, Alex Craig. I'm part of our Planning Center of Excellence at Workday. So I work with all FSI customers. I've been here for about a year. It's been a wonderful year. I live in Evanston, Illinois. It's sunny and lovely now that we're in May. Happy to be here in May, get some golfing in, get some time on the beach, all of that. Taking you through the demo today will be Rob from our trusted and wonderful partner, Okorio. Rob, I'll let you introduce yourself here.
Thanks, Alex. Hi, everyone. My name is Rob Komorowski. I am a solution architect here at Okorio. Been with the company for about 3 years, have some prior experience in FP&A and actually implementing Adaptive on the customer side. But I'm focused on the financial services industry, and I'll be walking you through the demo today.
Great. And Michael, do you want to say hello?
Yeah. Michael McGee, I lead FP&A and Treasury here at Heffernan Insurance Brokers. Been here over 3 years. My team also oversees the Workday planning environment. And I'm excited just to share some practical experience on how we've gone about planning and reporting and finance transformation, as well as give some operational perspective alongside the demo.
Wonderful. Thank you, Michael. I just have maybe 3 slides here before we quickly pass it over to Rob and get into the meat of today. But just high level, what is adaptive planning for? Like any planning tool, it's really to give you insight into your business to make better business decisions. So with that, it's your standard planning, budgeting, forecasting. And I think at Workday, we're very careful to make all of our tools user-friendly so that you're truly getting values out of these tools. And today, especially with the backing of AI and our AI capabilities, is not only being able to see your business, but being able to see those answers quickly and take action on that information. So really switching that FP&A kind of balance more towards the analysis and taking action side. So we're putting the A in FP&A. You know, how do we think about Workday Adaptive and kind of where it sits? I think of it as a hub of all of your meaningful data for planning. So that can be your HRIS system, your ERP, whether it's Workday or not. You know, any of your other tools that house that financial data, that workforce data, that operational data, that's going to help you make decisions and plan. So a lot of our customers, you know, have a full suite of Workday products. And then, you know, we have thousands of standalone Workday Adaptive Planning customers who use Adaptive just for that planning piece. But just wanted to call out that really, you know, we want to support your business decisions. We want to give clarity to your data and help you make an accurate forecast. And whatever data you need to make that possible, that's what we're going to bring into the tool. And Rob will talk about some of that data he's using as he goes through the demo today. Now, what are the elements of modern planning? Number one, true cloud. So Workday Adaptive was built in the cloud. It's never been an on-prem solution. So it's designed from the ground up to be a really single source of truth, multi-tenanted solution where all of the features are rolled out to our users. And you can turn it on and kind of have that best of class planning as that continues to grow. Any ecosystem we integrate with, like I said, customers who use a Workday suite and then customers who have totally different HRIS systems, ERPs, CRMs, etc. Now, our Hypercube technology, what I'll say about this is really what we're trying to achieve in planning is that delicate balance where you have scale and flexibility. You know, the flexibility part can be tough, and that's why so often you feel like you maybe get a planning tool or you get a process, and then everyone has their, you know, bespoke Excel models that they start sending around. So as best we can, Workday Adaptive is designed to give you one source of truth for planning, budgeting, forecasting, reporting, so that it's not this, you know, shadow Excel world that's running planning and running into those problems that we all have run into with Excel before. And then the last two, consumer grade user experience. So, you know, if your users aren't in it, if they can't get value, can't navigate the tool, all that Hypercube, all that scale, that's all worthless. So really important for us to have that usability. And then finally, the embedded AI ML. This includes things like our anomaly detection, our predictive forecaster, and then recently, as of April, is our planning agent that is now GA with our customers. And I think, Rob, you'll be showing the planning agent today and really how you can have that co-pilot to collaborate with as you make these decisions. So a lot of these ideas will be sprinkled throughout the demo. I'm going to pass it to Rob here to get into the tool. So I will stop sharing. I hope I kept that as quick as I promised. And yeah, now we get to the meat of it. So Rob, over to you.
Awesome. Thank you, Alex. Share screen. Okay, are you able to see that? Sorry, having a bit of an issue.
We're able to see it, but not, it's in.
Yep. There we go. Awesome, thank you. Okay, so today we're going to be focusing on Adaptive for insurance brokerages. So first, before we get into the demo, just wanted to give a few points on kind of some of the challenges that the industry might be facing as it comes to planning. So first, we have inconsistent planning processes across offices. So, you know, over time, there might be some acquisitions, things like that. The planning process might not be very consistent throughout the organization. With Adaptive, you can streamline that process, kind of get everybody on the same page. Then we also have limited visibility into producers and branches. Sometimes, especially if we have some planning models in Excel, getting through reporting, it might be very manual and a slow process. Just increasing complexity from growth and acquisitions, already mentioned that. And then ultimately, also, we have disconnected systems. So we have agency management systems, HRIS, CRM, spreadsheets, whatever that might be. So how can Adaptive help with this? So there are a few things, and why the planning needs to change. So first, spreadsheets can't scale with brokerage complexity. You add more complexity, there's a lot of rebuild required. We want to also make sure that finance is supporting producer-driven teams. We also want to make sure that leaders have reliable insights to then be able to make decisions and kind of facilitate that decision making. And ultimately, we want the planning to be flexible and easy for non-finance users. So let me flip over to...
And Michael, as he's flipping over here, does one of these bullets resonate as the driver of you all upgrading to Adaptive originally years ago?
Yeah, honestly, with the biggest challenge is always the collaboration and trying to get the information in a way that you can quickly pull on it to provide meaningful support both to accounting as well as to your executives and other branch managers. And when all the information is disseminated across Excel, it's hard to quickly navigate and pull that data together and then make sure that it actually ties to what everyone's seeing in actuals. So, Adaptive has been able to change that by just being able to have a single source of truth, right?
Yeah, great. Thank you.
Thanks, Michael. So as you kind of look at this page here, what we're on right now is one of the planning hubs. So essentially, this is your central hub for anything in Adaptive. We can have some of your sheets and data. We can have some of the assumptions, inputs, reports, things like that. So first off, we're starting here on the overview page. This really is just a page to give you a little bit of a company kind of summary overview. You'll see we have a performance summary down here where we can see the revenue trend over time, and potentially some instructions that we can add here as well. Now, on the left-hand side, you will see that we have some tabs here. So I'll go through these. First, we will look at the revenue plan. So what you see at the top here is some of the filters that we're looking at. So today we're looking at this version, our plan version, which is going to be this insurance brokerage demo. We're looking at all of the entire insurance brokerage right now. We can specify which levels we want to look at. So if we want to look at it by agency, we can also do that. And we'll do that a little bit later here today. Now, below that, you'll see we have some instructions. So these are just some general instructions that I've added to give you a little bit of an overview into what we'll be looking at today and how to make changes in this particular sheet. Below that, we have some kind of operational and financial metrics. First, we have a blended retention rates. So essentially like from prior year actuals, what percentage of business we expect to renew. Then we have agency commission income and forecasted premiums kind of by month. What we can then do is if we want to drill into any of these tiles, we can left click on one of them and then drill into it by some of our dimensionality. So in this particular case, we have employee-producer. So essentially we can look at it by producer. And then maybe we want to look at it by insurance line, which will be that commercial property, liability, workers' comp, things like that. So we have that drillability throughout the system. Now, if I go back here, what you'll see below that is essentially our main planning sheet. Let me actually expand that a little bit. So what you'll see here is essentially we have all of the actuals as well as our forecasted data. So we have the actuals for premiums, we have the actual commissions or by the brokerage. And then ultimately, we also have the producer commissions, which are based on some assumed rates for the payouts. So you'll see on the left here, we have some actuals in green, and then anything that's in the black font is going to be forecasted data. Again, here we can drill into any of this data. So let's say we want to look at some of the renewal premiums. We can do that. We can look at it by particular agency. We can also drill into it by that insurance line, the specific producer, and ultimately we'll see what the formula is. So in this particular case, we're looking at the prior, the premium actuals from 12 months ago, multiplying that by some sort of retention rate, in this case, about 88%, and then assuming a premium growth of 6%. Now, if I scroll down, if I collapse this and scroll back down here, you'll see we have some assumptions. So first we have assumptions by insurance line. So we have the retention rates, premium growth rates, and then as well as that, we also have commissions on both new business and renewals. So any of these cells that you see that are in white, these can all be adjusted on the fly. So let's say, for instance, I want to change the premium growth rate here from 6% to something astronomical, like let's say 50%. I will apply that to all of our lines. And what you'll see here is once I save, we're going to be expecting to see a larger commission income. And there it is. So all of the data in the system is live. So any changes we make will automatically flow through the system. Similarly, towards the bottom here, we have some producer commission rates. So if that, actually the label is wrong. This is actually new business as a percentage of prior year premium. So if we want to assume a higher percentage kind of growth year over year, we can do that here as well. Now, one thing that's really nice about all of these tiles is we can comment on this. So if we want to create a thread, I know Michael mentioned, collaboration in the system. I might pick on somebody from my team, maybe the accounting team, and I can send them a message. This will actually send them a notification in the top right here. And we can also integrate with Microsoft Teams and Slack to send them notifications there as well. So let me flip back over to my slides for just a quick second.
And as you're flipping back, just a couple things to call out. You saw very quickly that formula. The formulas are Excel-like. When folks deploy adaptive or manage adaptive, when you're deep in the tool, you learn those formulas. And the big difference with writing a formula in adaptive versus Excel is that formula is going to work at the dimensional level. So it's not at every individual cell. You'll have formulas that apply across the business, depending at the level you want to plan at. And one thing, Michael, I was going to ask you, as you centralize these formulas and the maintenance of some of these things and decide what level makes the most sense to plan at, I'm curious how your planning granularity changed when you moved to adaptive.
Yeah.
So deeper, at the producer level or what?
Yeah. So that is one of the difficulties at setup of adaptive, but long-term becomes a real powerful tool, is that, you do plan at the lowest level within adaptive. And so what that, from your formula drivers for, being able to scale growth and things like that, those kind of forecasting. So what that means is that I can actually drill down to the lowest level of detail now and be able to actually, just like Rob was saying, hey, what's growth for this producer identified by line, because we can either have that an automated growth of 8%, or somebody can go in during planning and identify, hey, this guy's actually going to grow 10%, or he's going to have a hard year because he lost a big client. Additionally, versus what Rob was just showing in revenue, where you saw actuals at the top and then you saw planning at the bottom because they planned at a different account. Our formulas are actually planning at the same level as actuals. So when we look at it, we would actually be able to see actual and budget next to each other. From a forecast perspective, you can see 6 months of actuals and then 6 months of forecast, or you can say, hey, I want to see each month showing budget versus actual and have those columns next to each other auto-populate. So you can really deep dive at the same level. So it allows for, again, just it's centralized in how the data is looking, and then able to actually cut it up whatever you need to be able to quickly answer questions.
Great, thank you.
So just some of the things that we can do specifically for the producer level planning, and we kind of discussed this a little bit, is potentially maybe forecasting revenue with retention, new business growth assumptions, aligning commissions and compensation with performance and the actual revenue. Also eliminating manual forecasting and spreadsheet risk. I know, Michael, you said that there might be some like overrides and things like that you do by producer. We can still do that in Adaptive, but we can also drive things based on formulas and kind of have that streamlined experience across the board. For profitability and scenarios, we can also understand profitability by producer, team, and branch. We'll look at a report a little bit later, and we can also enable producers to track their performance and run scenarios for, let's say, the remainder of the year.
I think maybe not everyone on this call, but probably most of you can agree that you want everything to be, consistent assumptions. But this is a producer-driven organization, right? So everybody's a salesperson, and so at the end of the day, branch managers are making agreements with producers that are one-offs and that are difficult to track offline, and that makes it really difficult for budgeting in Excel, because you need to have an ability to track all these one-offs, and as things come in through offer letters, being able to make adjustments. And that's just not feasible as we continue to scale and grow, and be not a hindrance to the business moving forward, but instead helping them. And so that's where, again, Adaptive has that capability, because you have one source of truth, you have all the data there, and you can make those one-off notes, put a comment next to it so that you don't forget why that happened. And then it's also there when you go to roll for the next year's budget, or later on when you're doing budget actuals. Why do I all of a sudden have $1 million here? What was it meant to be? Oh yeah, we aligned that there was going to be a one-off revenue that wasn't expected, so we had to go above seasonality.
Great. Thank you, Michael. Let me flip back over to Adaptive, and we'll go through some other planning that we might be doing, which might be expense planning. So Adaptive is system agnostic, so we can integrate from different sources. You might have data for personnel, we might have data for capital, CapEx, other operating expenses. We can build that all into our models here. So what you'll see on this expense tab is we're going to have 3 separate sheets. One is just going to be the personnel sheet. So this will include both the producers as well as all of the non-producing staff. We also have some operating expenses. So in this particular case, we have kind of a trended operating expense sheet, and we have a CapEx sheet as well. So at the top here, you'll see just some quick high-level KPIs, current headcount. You'll see this is kind of as of May 2026. We have 248 heads. We also have an operating expense forecast, which is split out into labor and non-labor. So you'll see these kind of stacked together. And finally, we have monthly depreciation, which is split out by asset type. So if we want to make any changes here, let's say I want to make a change on the personnel sheet. Let me just expand that. So what you'll see here is, let's say I want to just take a look at one of the employees, kind of what the detail behind some of the calculations is. I can go into row details. I can see their monthly salary, all of the benefits and taxes that are being calculated. We can see the pay rate here as well. We can see tenure if we want to make any assumptions for merit increases and things like that. Now, if I want to make any changes, let's say I'm planning to hire an additional senior underwriter, what I might do is I might just copy one of these rows. I might just copy one of the rows. It will show up at the bottom here. We can name this to be hired underwriter. They're not going to have an employee ID quite yet, and we might be planning to hire them at some point in the future. Let's say, maybe we'll go for June 18th. We want to select whether or not they're going to be receiving benefits. I assume yes, and we'll apply a particular pay rate. All we need to do is just hit save, and this will propagate throughout the system. So then if I go back up here, so our headcount in May was 248. Now, if we go to, let's say, July, oops, my mistake. Let me actually change it here. You'll see that headcount kind of reflected here. That will also be reflected throughout the forecast. So any of the labor-related expenses will also go up. Now, similarly, we have an OpEx sheet down here. So this one is actually a slightly different type of sheet. So this doesn't have a record per, when we're looking per employee, let's say. This sheet actually is a cube sheet, which has different dimensionality. So we have several different GL accounts. We also have cost centers. So let's say I want to just look at a particular GL account. And I might actually change some of our dimensionality here to put cost center on the rows. Now, what I'll do is I can then make some changes to the data. So you'll see we have actuals up here. We have some assumptions that we've created for essentially trending these expenses using prior year actuals or 6-month rolling average. Then we have some overrides that we can put in. I'll just need to select a specific level, which is going to be our New Jersey agency. And I can make changes in here. So let's say I'm expecting the sales and marketing instead of this 529. Oops, sorry. Let's say I'm expecting that sales and marketing spend for training to be $5,000 in this particular month. I can make the change here. And you'll see that kind of reflected in the final amount, which will then flow into the income statement. Now here we can also use machine learning. So that is native functionality of Adaptive. So we can use machine learning to trend some of these expenses as well. Finally, down here we have CapEx, kind of similar concept to the personnel sheet where we have a record per asset. What we have here is some of our different types of assets, descriptions for them, purchase dates, in-service dates, and amounts. We have an assumption for the default asset life. So that will use straight line depreciation based on that default asset life. If I want to go into row details to see a little bit more information about it, this is where I would go, and I can see the monthly depreciation, which will then kind of flow into our income statement. You can see the net book value and accumulated depreciation as well. So these are some of the ways that we can plan for other expenses in the system. Let me just flip back over to our slides. So this is one thing that Michael, I know you mentioned previously, having that one single source of truth. we can centralize a lot of your data and a lot of your planning, not just the revenue planning, all of the operating expenses, overheads, things like that. We can build in allocations. We can bring in data from your HR system and any manual inputs, things like that, to then be used for budgeting, forecasting, analytics, reporting over time as well.
Yeah, that's been kind of the most important piece for what planning has been able to do for us. I know generally people consider, the tool says planning in it. This is a planning tool, and I know that's what we're primarily talking about here today. But when we came to Okorio, we actually had a different idea with Epic, which was because Epic is our AMS, we wanted to use something that would allow for better reporting, not only from planning to actuals, but actually just actuals reporting, internal financials, things like that. And so what we were able to do is utilize this tool, adaptive planning only, as kind of like an ERP light. So bringing in transaction level data details from Epic so that we could actually do not only budget to actual reporting, but also actuals drill down to what is the lowest level and being able to actually see what entries have been booked in. We've gone so far as to be able to actually drill back into invoices because we save them in SharePoint. So been able to do a lot of that, as well as then, having connection to our HR system, being able to do headcount analytics, salary data, questioning between actuals and budgets, and being able to drill into what did payroll book and actuals versus what did we have based on actual headcount data versus what do we have in our budget. So this linking, as well as being able to use the flexibility of Adaptive to pull in multiple tables from Epic into a single source, allow for us to go to a lot more nuanced detail that allows us to really answer detailed questions that don't require a master's degree in understanding how to use Epic, which I always felt was a little bit more difficult for me to use versus being able to pull all of it into this, and then everyone, both accounting and finance, being able to reference back to the single source, and we all agreed on a validated number. So a lot of power here with this one source of truth.
Thank you.
That's great.
So let me flip back over to Adaptive for one last thing that I wanted to show, which is going to be reporting. So for reporting, we have very, very powerful reporting engine built into Adaptive. What I'm looking at right now is essentially our income statement. So you'll see we have the agency commission income. We have all of our operating expenses, including some of those trended ones that we had looked at. We have some allocations in future periods, and we have depreciation that we had looked at. What you'll also see on the columns is we have our kind of demo version compared to the prior year actuals, which will look at kind of the 12 months prior period. And then you'll see a variance from those prior year actuals. Now, one great thing with the planning agent that recently rolled out is we can now analyze variances from directly in the system using kind of natural language prompts. So what you'll see here is it's going to review the variances and kind of provide us with a summary of what has changed.
And one thing I'll mention as this is going through here. Now I'm no AI expert, but my layman understanding, it's pretty exciting, is that when we are using the agentic AI agent within Adaptive, what's happening is that prompt is running through the model to calculate those answers. So whereas normally AI that we use, you go to Claude, ChatGPT, whatever, you write a prompt, it's going to give you a probabilistic answer, which is prone to hallucinations, errors, those sorts of things. And the answers given by the agent here are deterministic in that they're running through the adaptive data model to calculate those answers. So we had 100 or so odd lighthouse customers testing the agent. And one of those customers ran like a 1,000 prompt test and had a 100% accuracy rate on those answers. So it's something that, we have hundreds of customers live already today. It was released to our, general customers in April. If some of you are customers on here and you're thinking, what the heck, I haven't seen this, that can be turned on. So contact me, contact Rob, contact your sales rep or customer success representative, and they can help you with that. But it's really exciting. And we have the analyst skill released today, the variance agent, and then there's like formula modeling, all sorts of other skills for administrators being released later in the year as well. So it's happening quickly. It's working well. It's live at customers, and we're excited about it. Go ahead, Rob. Thanks for the chance for that little commercial.
Yeah, thank you, Alex. I clicked the wrong button. So what we're looking at here is the variance explanation for our payroll. So essentially what you'll see is it kind of looked at the difference between our payroll for January 2026 compared to the actuals for January 2025 to identify what some of the changes are. So you'll see some of the commissions have changed. It looks like some of the FICA. We can also see a level breakdown. So you can see the agency in New Jersey specifically accounts for a large part of the variance. You'll also see some of that employee or producer level breakdown where we have that other dimensionality that we can also look at. And finally, we have the insurance line. So we can analyze the data in many different ways. All of this is drillable. So if I want to look at payroll by one of those specific dimensions, I can do that. I can look at specific levels, some of the accounts that roll up to those. We can also, for cases such as mergers and acquisitions, we might want to isolate activity from kind of the main business. We might want to just select specific agencies, and we have those 4 selected. You'll see the data sort of updates and refreshes to reflect that as well.
There's a question that came in, Rob, just around, so if you're loading transaction level data, does the analyze variance function you are showing review the transaction level data to provide explanations? I'll give a short answer, Rob, then if there's anything you want to add. The answer would be yes. If that data exists on the tool, the agent is going to be able to analyze those transactions. So if you want to call it down to a subset of the transactions or tell it what threshold you're looking at or what area, you can specify that. Because one thing that's really great to do with the agent is kind of use it as a high level, analyze variances, and then kind of drill in and ask deeper questions as you go. The agent is contextual across the model, meaning that it knows what information you're looking at. It knows your role, what permissions you have, those sorts of things. So that really helps give answers that are relevant to your questions.
Yeah, those are great points, Alex. I think one thing I'll note is dimensionality in adaptive. So the system is very configurable. If we want to add additional levels of detail, we can certainly do that. So here, as we talked about, we have that insurance line, we have the level, which is our agencies, and we also have the producer level detail. So if we wanted to add some more of that transactional detail, you'll then be able to drill through to that. You'll be able to analyze variances, maybe by vendor, by cost center, things like that.
Yeah, and how we're using it, we're doing a lot of that variance analysis and drilling down levels. We have both the ability to, go down a level like you're showing, as well as drill to the actual transactions. And whatever level you're at, it'll pull all the transactions below that. So it creates a very quick report, similar to trying to do something in your AMS, but having to figure out what exactly you want and pulling all the different levers to get your number. You already have it here, and you can actually just start pulling data at that level, which is nice. I know something we've only been in the system today, but the other thing that we use a lot, this is our FP&A team is working inside the system in this way a lot more. But when we expand this out to accounting, a lot of how we're working with accounting in this also is actually using the Office Connect and native Excel functionality, which really opens up Workday to even more users, because they can kind of keep it into the reports they're already doing, but having refreshable data. And kind of, I think this, sometimes when people see this to begin with, they're like, oh, wow, I'm going to need to have a whole bunch of training. But when we start users in how the data is working, we usually start them in Excel and just get, tying a single piece of data. And they quickly, once they get a taste for what Workday has to offer, they want more. And then they get into this level of, okay, how do I do this? What do I do next? Let's get there. So very interesting.
That's great, Michael. I never thought of Excel as that little taste you give them, and then they're like, all right, let's get deeper. Let's get beyond the, Office Connect add-in, which, yes, is very powerful. But yeah, that's a great point. Thanks, Michael.
Yeah.
Rob, I'm looking at the time here. Is there anything else you had wanted to show in the live demo portion?
I think the only other thing that I wanted to show, and something that I find is just very useful, is throughout the system we can talk to Ask Workday to just help us find answers and kind of configure the system. So this is a very self-serviceable tool where if we want to create a new level, I can kind of message Ask Workday. It will navigate me through doing that. So let's give it a second here. So you'll see essentially we get full instructions on how to create a new level, how to create a GL account, dimensions, how to make updates to formulas, things like that. We can do that all from here. And it will also even provide sources where you can go and read more about the tool.
Great. Thank you, Rob. All right, so just a few minutes left. Michael, I know I've put you on the spot already a few times, so for everyone in the audience, just know Michael didn't get prompted all these questions before, so we've appreciated the sport he's been. But curious, Michael, I'll ask you about 3 questions. And first, what is life like for you today, or for your teammates, versus what it was before you came to Adaptive? What have been those real big changes in your day-to-day experience for you?
The biggest change is probably we've shifted our focus to being more collaborative between the different groups. And now everyone wants to be collaborative, right? Somebody throws out a question, either a branch manager or accounting sees something when they're closing the books, or you're looking at it during BVA, and the first thing everybody does is go, oh God, first I need to pull a report to tie the data and figure out what whether that is the correct number that they're looking at, right? So because reporting, reconciliations, financials are all centralized and refreshable, okay, and like I said, we're using a lot of that. Most people are seeing that in Excel with Office Connect, because that's an easy way to start. And then they drill back into the system to get more detail and transaction level. So gathering and validating information is removed, because we've already all aligned on what is our source of truth and how are we going to refresh data across the company. So then now we're moving more into analyzing variances, trends, etc. So it also changes, cadence of conversation with the business as well, because since the teams are able to actually use a lot of this to close their balance sheet reconciliations or close the internal financials and have it refresh, they can now start bringing early questions on analytics even before they've closed the financials between budget to actual. And we can actually start looking at that data, pulling our information deeper in Workday for what is the planning confirmation and reason for it, and make adjustments before the financials close, as well as then be able to build out metrics for the executives. So by the time financials have closed, we've already been able to give, hey, these are what metrics are going to look like before we've even started BVA at a detailed level. And it also gives more time then, thinking one step further, finance and both accounting plus FP&A together have now been having more entity level monthly meetings with branch managers because we have extra time in the day. So again, the conversation is more collaborative, where we've aligned on what the report looks like. We can now talk to people about what it means, versus previously it was just about pulling the data together.
Yeah, that's great. It makes a lot of sense too that, if you know that the data exists and you can find it, then, bringing people together for those conversations is a lot more palatable and interesting for everybody. And, you said, I think as you put it, gathering and validating of data is removed, which I'll probably quote you on that, because I think that must be a pretty nice thing to experience.
Yeah.
All right, so I think we'll just ask one more question to be respectful of time here. We're already a few minutes over, and so you get to put on your mentor hat. For those on the call, just parting wisdom for somebody who's starting to use Adaptive, or maybe wanting to enhance the way they use it, or even recommendations for how you would evaluate a tool like Adaptive. Just curious if there's any Michael McGee parting words you want to leave the attendees with.
Wow.
It can be life advice too. If you talk,
life advice that I'll go there. Let's not, Adaptive we already talked about. No, you definitely took me on a different path in what I was going to talk about. If you're looking to question, Adaptive versus another tool, at the end of the day, our primary points of what we were looking at were how easy is it to implement, how easy is it to adopt, how easy is it to scale, and comparing that, because different tools are easy to set up, but then you need a whole team of IT folk to keep them moving, versus Adaptive is a pretty grab and go system. If you starting at the top level, once you start going transaction level, it takes a bit more work, and Okorio was very helpful in walking us through that. And we did go into some roadblocks along the way, but at the end of the day, it came out with something pretty powerful. But I would say, when trying to get adoption, matters just as much as the technical implementation itself. So if you can't build it in a way that allows users to start using it, you're going to be stuck in FP&A in the same process where everybody is coming back to you to answer every question. And so we spent a lot of time on trying to roll this out and train up and get enough licenses to have accounting have their own licenses, branch managers to have their own licenses, and then to have office hours in those items, because you want them to see the opportunity. And once they validate that first piece of that first number at the top level, and they go, I know that ties to what I have offline and whatever I've been doing in Epic or another AMS system. As soon as they do that, it's like a world opens up, because they just have to make a small tweak and it pulls open a new account, or it pulls open a new month, and you can see how it quickly just expands. And so once we get people to tie that first number, they're hooked, and they want to keep finding ways to automate their process so they can get more into the analysis.
Oh, that's great. And I appreciate the framing of, thinking about not only what's it take to deploy, but then what's it like to own it and to scale and evolve the tool.
Mm-hmm.
Well, thank you very much first to Michael for all of the insights and how Heffernan has used the tool. Thank you to Rob for a wonderful demo. And thank you to all you attendees for coming today. If you have questions or follow-up, I'm easy to find, alex.craig@workday.com. I'm sure you can find any of us on LinkedIn. And again, appreciate the time and hope everyone has a wonderful rest of the day.
Thanks for the invitation.
Yes,
Thanks,
thanks. Bye.
All right.